Okay. Hopefully you can hear me well. You can hear me well, and as well you can see my screen, right?
Yeah.
Yeah, yeah, okay. Ah, anyways, before I proceed, I want to show some kind of recaps. So for those who attended the previous session with me, you saw how I told you guys that BTC is likely to pump and go to 100,000. So you guys, you gotta hold. Though most people were asleep, never held price from around somewhere here. They were asleep. They never held. So currently BTC is at 97k. Uh, anyways, if we missed size, but price is still in our way. We can also get spirit milk shouldn't be cried at. We shall get trades after after our sessions here. We shall get trades and we shall make money out of it. So and literally the person yesterday I sent you Emma the setup. So currently I'm looking at selling GBP but it is selling to bring in more liquidity so that they will sweep out these sellers who are there. Maybe they tap us, then we kind of sell. That's what I'm anticipating on this pair. Then on gold yesterday I gave out this setup. Literally Emma, you are the one who saw this setup, though they never activated because of over refining, and I missed out this trade because literally I had my $5 that I wanted to risk. I just take it where I want to sell it from. By the time it hits my TP, I have made something like 600,000 or $5. Weird, right? So by the time would be here, it would be in something like 80 something dollars. But they never activated me, so I chilled out. Since I'm the person with the skill, the market comes and makes out what I want, not me running into the trade. So people who were bought from here, they were literally buying, but it was creating something called liquidity for them to be swept out. Then it starts the main move. So for us who were the sharp, who were trading, who literally were trading mine, and I saw one of my students who is here, Sonko. I think you caught up this trade. I think you caught up this sniper. Though for me, I really refined because I was using a smaller account. I wanted to make some money because I have what I have currently. It's sustaining me, though I need more money. So I was just risking some $5 that was remaining. Um, what else? Euro NZD is really stupid because I wanted it to come and attack me and then I buy, but it is literally just playing around my mind. But as a person, if I'll be patient and I see some kind of price action, what price is doing, then maybe I could enter. But literally, if I could look onto 4 hour, because if I could look onto 4 hour, we might be looking for some areas to sell more, to sell more price. So let's be kind of cautious about buying. I will get some trades later because currently I'm not looking into trading this pair currently, but this is my area of interest. No matter how it does all this shit, like you see gold, I'm sure that it will come, tap me up there, then it pumps. GBP US GBP USD. I'm just doing a recap. I haven't studied GBP USD. Um, I think this pair I was in it. So currently it is creating something sweet. It's creating something sweet off this area. So kinda some buys may come off this area. Some buys may come off this area. So let's be vigilant. Those whom I already taught, they know what to do. So those who have just popped in, just relax. You are with the mentor. I'm gonna teach you, and in a simple way, like I'm gonna show you things literally in a simple way, so that you start grinding up the market. But all I need from you is practice and give in time on charts, you practice something that I tell you. You follow my words, you will be successful. You follow my words, you'll be successful. Literally, currently, the people I'm handling right now, you are all intermediates. I'm not expecting a newbie here, right? Because if you lied to me, the first question that I always ask a person when you approach me, for how long have you been in the market? Because I have two ways of teaching. I have ways how I teach a newbie to come on to my understanding, and how I teach a pro trade, an intermediate to come on to my understanding. I have two different ways of teaching. So please, if you are a newbie, say it out. I don't want to teach a newbie because you'll get confused or you'll not understand something. Me requesting money for mentorship, depending on the level of forex level you are at, it's not a joke because I know what I'll be talking about. So let's continue. Let's put that aside. If you're a newbie and things start up refusing, just know I will know. You get, because an intermediate here, it is things will be kind of really so simple. So let me continue. We are looking at what we call support and resistance. This is not the support and resistance you guys know that of these drawing trend lines, then you'll be like, okay, this is my resistance level. When price, since it is in the bullish, when price comes there, I'm going to sell. Since it is, like this stuff, literally no. Okay, I don't trade this shit. No, this is an advanced way of trading support and resistance, and I'll tell you where it all came from. Get so. So just two locally there, because you just sit and be firm. Currently, the only advice I will give you as the person who have enrolled for my mentorship: one, stop trading. Don't trade the live account anymore. Number two, focus on charts, focus on the skill. That's number two, focus on the skill. I don't want you to trade your live money. Number three, I want you, anything that comes into your mind which you haven't understood, reach me out. I am 24/7 active, and even if you find me not active because I'm human also, please leave a message. I will reply you straight away. That's the third thing. Number four, we are going to hold a session and you'll go at my pace, okay? Because I know what I'll be talking about, what I'll be saying. So the mentorship is we are going to study one lesson per week, and on every today it's a Thursday, right? On every Thursday at this time at 9, we shall be holding a session, and the session will be running depending on the level where I reach. You get, because we shall reach a level when we may hold only a lesson for only 1.5 hours, but currently the lesson goes for 3 hours. So these 3 hours are of your importance. They are hours where you're going to get your freedom. So spare the 3 hours, and you give in other things, the hours that will be remaining out. Let's put that aside. So me personally, I trade what I call levels. We call them levels, support and resistance levels. And this support and resistance, it was introduced by the Malaysians. That's why it is called Malaysian support and resistance. Hope you're hearing well. It is called Malaysian support and resistance. It is called Malaysian support and resistance. In a short form, it is MSnR, Malaysian support and resistance. So this is the concept I trade, and people feel like, man, how do I get these small kind of entries? Then I get snipers, because literally, if Emma, you could remember, if you could remember, I told you that I'm buying pound from here, then I'm selling it around somewhere here, though they never activated me, but you can see how it's sold. So this is just something so simple. of which I trade. So currently, now, and another thing, what I would prefer you guys to do is you get your book, if you have a book, or where you write. We study these things. You be with with a notebook where you record yourself, or andika kasasiko, like you write your summary somewhere. So currently we shall look at levels, which levels do act on to price, and those levels are called types of MSnR. We look at types of MSnR. So currently, if I talk about MSnR, you know what MSnR, or what I'm meaning by MSnR. What I be meaning by MSnR, Malaysian support and resistance. So we shall currently look at types of Malaysian support. We shall look at types of Malaysian support and resistance. Types of, sorry. Hopefully you're on and you're getting, you're all on. Yes.
Yeah, I'm on, but the screen is slow.
The screen is slow. Sorry about that. This is I don't know why. Anyway, I'm a recording. I don't know if the whatever I'm using is one with the problem, but everything will be at par, maybe. Oh, anyways, let me ask. Do you guys have do you guys have what? Do you guys have Google Meet? Yes.
Yeah, I have Google Meet. I think
I have.
it's the better option.
Okay, let me use Google Meet because trading Telegram most cases disturbs me a lot also. But let me try out Google Meet. Then I come back. Okay. So I was still on okay. Hopefully my screen is not now slow. Yes. Is okay now?
Yeah.
Okay. Let's continue. Though I'm recording, I will share the recording for those who aren't around. I will share the recording in the discussions group. So those who may have missed, they will watch it from that side. So let's proceed. I was talking about Malaysian support and resistance, and we are going to look at types of MSnR. So what are these levels, if I could explain to you? What is a resistance level? First of all, let me put out this here. What is a resistance level? What is a resistance level? What is, we are looking at Malaysian M and Malaysian support and resistance, Malaysian support and resistance, MS, Malaysian support and resistance. So we are going to look at what is a support and what is a resistance. So resistance, let's look at what is a resistance level. Resistance level. These things are really simple. Currently somebody may be like, oh, but it looks kind of hard. No, things are really simple. Just that people whom you meet, they are the one who teach things that aren't really necessary. So what is a resistance level? So we are looking at why is it called the Malaysian support and resistance? It is called Malaysian support and resistance because it was introduced by the Malaysians, by the what? By the Malaysians. So let's look at that support and resistance. So in most cases, when you are trading this concept, it is when you're marking support or when you're marking resistance, these are levels. And what are those levels? For example, what is a resistance level? This is a level. This is a level where we anticipate anticipate a strong price, a strong price to refuse uh, further to further further price rise or further price increase. Further price increase. So whenever you mark any resistance level, that means where you have marked, you are anticipating that when price reaches there is a strong price. That's a strong price level. Remember, here we deal with levels, and we watch levels. Those levels are dealt in prices. So this is a strong price level where we anticipate um, there won't be any further price increase when you're dealing with the resistance levels. Whereas the support level, sorry about it. Whereas the support level is a level where we anticipate a strong price to hold, a strong price to hold or to refuse. It's the same thing, to hold or to refuse. To anticipate a strong price to refuse further price decline. So what do I mean by this? So for example, you have marked your support level, resistance level here like this. Let me first remove this. Okay. You have marked your resistance level like this. So this is when the market is coming, trading. Remember, when it is going up, it is creating higher highs, higher low, higher highs, higher low. It is coming, right? Like this. Then when it reaches at your level, you anticipate this level here, it will refuse. This price level will refuse further price increase. So here you anticipate selling from there. So this is what we mean by a support, a resistance level. This level okay. So this is a resistance level. This is a level where we anticipate a strong price to refuse further price increase. So remember, this what is moving, it is price. And this level which you have marked, the price at which you have marked, this is the price we are meaning. This is the price level where we are anticipating which we anticipate a strong price to refuse further price increase. This is what is meant by a resistance level. So let's look at a support level. A support level. It is really, these things are really simple. Just the people you meet, they are the one who teach things of really the stupid things that really aren't necessary for somebody to be profitable. You get. So let's look at support level. So this is a level where we anticipate this where this is a price level we anticipate for it to be strong to prevent further price decline. So we anticipate buying from that level. You get. So this is what we call a support level. Support.
Excuse me, Kate.
Yes, please.
Eddoboozi lyo liri wansi nnyo.
Are you sure? This is what we all. Guys, are you all facing the same thing?
No,
Kate, tetukuwulira eddoboozi liri wansi nnyo.
No, it is only you because I have done everything, but I have done everything. If you're all experiencing the same thing, maybe. You increase your volume, or else maybe you're using your phone and the volume is low. Okay. Guys, are you all experiencing the same thing? And if in a okay, if you're experiencing anything, or else you just tell me so that I find out if everybody is facing the same thing, so that we rectify it and we proceed. So currently you have understood what the support and resistance do mean. So these are the meanings. So if you have your notebook, you can write. So let's look at types of MSnR. We are going to this is just a beginner. We are going to look into them. We are going to have a drawing and you see how they look like. There is nothing special. This is what I call the real price action. So anybody lying here about anything, this is what is called the real price action. The real price action, where you are going to read candles, and after reading candles you find the price where you are going to buy from. So you have been doing price action, reading price action for you to enter inside the trade. Okay, let me first read this, then I will tell you something also there. So we are going to look at types of MSnR. Types of Malaysian support and resistance. Malaysian support and resistance. So in those levels we do have one. It is called apex. So you write them down, because these things are the ones that we are going to use on a daily basis, and I will need you to be so sensitive where we are, because you are intermediates. So I will need you to be so sensitive and do things accurately and understand, so that these things are in your blood. I want these things to be in your blood, so that when you just wake up, you just see something, then you be like, see, because of price having done this and this, I'm expecting this and this to happen. You reach out when you are the one to command the price. For example, the setup of gold. Remember, yes, the other day it bought and people were in buying seriously. We are holding. But literally, somebody, Emma, I hope you remember, I was chilling. I was like, price will surely come back here. Then I buy because it had done everything, so it had to come back. And seriously, it came back. Though it never activated me, because I was looking for those sniper entries. But I will teach you all of them, how to find those snipers and I'll show you the disadvantages of when you're looking for sniper entries. Though they are really good for those who do trade small accounts. Really, here you necessarily don't need to be with a lot of capital. You can wake up a day, you'll be like, okay, I have my 20,000 Ugandan shillings. Those are around $2 or $5 or $2 or 5, something like that. Then you go on your chart, you'll be like, I'm trading this pair. You grow up that account in just a single day, you make 300,000. Not even a whole day, because a whole day has 24 hours. So you just make 300,000 in just a minimal time. But I will teach you one by one. Just you give me your ears and and please put into work everything that I will teach you. And forget about trading first, of placing your money into trading. Let's focus on the skill. And you guys, yes, you paid for mentorship. If you fail from me, if you fail this course, you come back, I pay you back your money. If you fail, if you feel like it is not working, I'm refunding your money with 100,000 or with a top of 100,000 on top. I'm refunding it if you fail. And if you could find somebody who will teach you something better where you get sniper entries, okay. If they are there, but if I fail, because I'm part of them, if you fail here, then I'm refunding back. But let's proceed. That's it. That's I'm serious, by the way. So let's look at types of MSnR. We have what we call Apex. Number two, we have what we call gap SNR. Please write down these things because you are going to be using them. We have number three. We have gap SNR and we have SBR. I'm going to explain the terms and how they look like SBR and RBS. We also have Apex. We have Apex. Sorry, not Apex. It is a QM, number 4. QM. Then this number 4 here, I will explain it to you, but it is there. But I rarely use it, though it is there. So I rarely use it. So these ones are the one which happen a lot. But these ones in 100 trades, you can find something like 1. In 100 trades, you can find 1. And reason why I don't emphasize people to trade this, reason being, this QM, it is a high risk entry trade. So it gives high risk trade. So typically we shall focus on this, but also this one I'll teach you how it looks like and if you spot it, but I rarely use it. Okay, let's proceed. Okay, right. Okay, we are looking at types of MSnR. So we have Apex. We are going to look into Apex. We are going to look also into Apex, how the Apex looks like. Apex. Okay, Apex. Remember anything you are seeing here, Apex here. And then anyway, let me explain one by one. We have Apex. And in Apex, it is either a resistance and we have in Apex number one, we have what we call a resistance. So I'm going to use just an abbreviation. A resistance, Apex, and a support, Apex. But literally, you are not going to use that this is a resistance Apex or support Apex. but all I'm naming it for you to understand. So a resistance apex, you know what it will be saying, that it is an apex that prevents further price increase, and support apex, it is apex that prevents further price decrease. You get? You're understanding, right? You're on,
Yeah.
you're getting. Okay. Okay.
Yes.
Okay. So in a resistance apex, we are in a resistance apex. This apex, it is called A level. It is called A level. So if you find out somebody who will be like, I marked on A level. So these are the terms we are going to use. That these are all you. These are the terms you are going to use. That I marked the A level. I saw a V level. I saw the SBR. I saw the. You understand that? Mm? Okay. So remember, this is a support. This is a resistance. Then in a support apex, it is a V level. I will explain to you why it is called a V level and why it is called an A level. Okay. So let's go and let me. Okay. Okay. We are looking at apex. Let me draw them so that you see, and I'll go on charts. So the reason why it is called an A level, okay, this is a remainder. Currently, when we are trading MSnR, we use two types of charts. We use a line chart and we use a candlestick chart. As you can see here, we use a line chart and a candlestick chart. So whenever you mark an A level, in most cases, I will show you how we mark them. When you put on a line chart, it is in your form of an A. An A. Sorry, let me put it well. When you are marking an apex, a resistance apex, A level, it is in a form of A. So this is the apex. The A level I'm talking about. This is a line chart. This is a line chart. When it is so simple. You will see it on a line chart. So when you mark, this is a line chart. It is signaling that this is an A level because it is in a form of an A. Then a support apex, a V level, it is in a form of a V. It is in a form of a V. So you can see that V signaling that price is buying and A signaling that price is selling. So this is a resistance A level, and this is a V level, and this is where we do what? We do mark here. I'll show you on line chart and on the candlestick chart. So let's go on a candlestick, we see. So for example, I have my my candles. This is the year. This is how they look like. Let me first draw them. You'll see. These are my candles. This is let me put this in white. Let me also draw this red here so that okay. All these things are really simple. It is just a lesson of reading candles. So let me draw here. even this. Okay. So an A level, this is how it looks like. So it consists of a buying candle and a selling candle. I'll show you. I will show it to you, and I will show you how you mark them. So literally here, when you're trading MNSR, we basically focus on closing prices. So we mark. How do we mark an A level? We mark from the closing price. You see this. This is a bullish candle. When you're marking an A level, we mark the closing price of a previous candle. Of course, the previous candle determines what that level is called, the closure of the previous candle. So where do we mark? We mark the closing price. This one here. This is where we do what? We mark. This is it. This is where we mark the closing price. So this is what we call A level. That's what we call an A level. An A level. And also this, you can see that this candle sold. This candle sold. It is the same thing. This candle sold, closed here, and immediately this candle did what? Open. So on a candlestick chart you will see this, and on a line chart you will see this. Hope I'm communicating. Yes?
Yeah.
Hmm?
Yeah.
You can see that on this one, the A level, this candle opened, closed, then it did what? Sold. Hmm? So literally, we mark. This is where we do what? We mark. So on a chart, on a candlestick or on a line chart, you will see something like this, like that, going down. It's just as simple as like that. And also here, this is where you mark the closing prices. The closing prices, as you can see. So the chart, the line chart will show you that it is sold and bought. To that side. If you do a mistake and mark here, yes, it will show that you have marked, right? You have marked, or else the candle opened here, and this what this candle opened, and also this one opened at the close of this one. Then it bought. Yes, on a candlestick, it will show that you marked on the candle, but on a line chart, it will indicate that you just drawn in an open place. It will just show that you marked in an open place. So that's how we mark these levels. So what do we anyway, shouldn't go further on this. That will be another topic. So we are looking at types of MSnR. So we have looked at how the V and A level looks like. V level, V level, V level. So we have looked at how the V level looks like. And I will need you to go on your charts and draw this stuff. And draw this stuff. So let me go on the chart. I show you something. This is a 1 hour chart, so there is a lot of noise. So I will go on upper charts for you to see it just in an easy way, so that you aren't done what so that you see things clearly. So even if I go on a monthly it is better, because you'll see the things clearly so well, like they are really visible what I'm talking about. So you can see this bullish candle, bearish candle. So this is, let me put on this. This is a V, I mean an A level. So it is showing a resistance. So this is a resistance. So when price left this, it created a resistance of a weekly chart. But currently, let's look at types of MSnR. So what I was explaining is, if you put on your line chart, you will see that I have marked on a tip of an A. You can see that it is an A. So if I put back on the line chart, the candlestick, and I mark this opening price, I go down, you will see that it is in just space. So it is not showing anything important. So literally for us, we mark the closing prices, and I need you to be doing that. We mark the closing prices. Now, why do we mark the closing prices? Because, for example, we may have something like this. The candle comes, opens. Okay, this is a bullish candle, right? Then this bearish candle opens from there because of slippage. Then it sells. If you spot out something like this, don't mind about this slippage that happened. All what we mind about the closing price of the previous candle. Because I know you'll ask me that question. For the students that I have taught, they literally ask me that question. Oh, I have had that. So for literally newbies, for them, they don't understand by what is slippage is. That's why I had to first go back. I explain what slippage is. Slippage is jumping of prices anyway. So remember, for the candlestick, after the closure, immediately another candle opens from the what? From the closure. But this jump indicates that there was slippage in the what? In the market. So price was jumped, like there was jumping of price, and this happens during news events, new weekly open, new days open. You get those when you get those slippages, and this happens. For example, the other day I was in a sale of Euro NZD. Instead of hitting my TP, they jumped price, went and activated buys. They jumped my take profit, they went and activated my buys. Then they came back. They came back, they hit my break even. I was like, these niggas. So that's how it happened. So here, you mark the closing price. However much this bearish candle opens from this side. For us, we deal with closing prices. So you mark this there. So I hope that that's well understood, right? Yes, team. Hopefully that
Yes.
you okay. Hopefully that is well understood. So you can see, I want you, after the session, you go and mark only the A levels. You see, A levels. You mark the A levels. So let me mark. So very fast, you see, this is an A level. You see that an A level here. An A level. It is here. The price closed. It is an A level. And A level, you can see that. So you can do these examples as many as possible because they are literally on every chart, or either futures, or currency pairs, or coins, or it is everywhere. It is everywhere. You can see this A level. So I'm currently marking A levels. A level. If you think I'm lying, all these are A levels. You see this A level. I just want you to mark A levels. A levels. That's the homework I'm giving you. This week, I'm giving you the homework because currently you want to be trading. So the time you'll spend that you want to place a trade, you do this homework. You get? And I need you to submit them on my Telegram channel. On my Telegram. You put them in my inbox. Don't send in the majority group. Send in my DM. And I'll be serious. I want to go. By that, this is another thing. If you don't do my homework, sorry. If you don't do my homework, I will take your money for mentorship, and I will remove you from the group because you will be unserious. Unseriousness causes somebody to call me a scammer. So if you are not serious about my work, I'll take your money and leave, and I drop you out. So, as I told you, you have to follow my instructions. We have to move out of this rabbit hole of us being poor. And if you want to still be poor, I'm not enticing you to be in that league. So I will remove you from my league. That's a rule. So kino kigaali kyamaje gye walinya yeeyo. You have to follow my guidelines because I'm helping you out. So this is, you can see the A levels. If you put on line chart A levels, you can see how I mark the A levels. All you mark. So I'm just giving a glitch, the example how you can do that. So let me remove this. And please, if you haven't understood, ask. I'm ready to answer. I'm ready to answer any question. So let's go and mark V levels. So on the line chart, you can see that this is a V level. That is a V level. We have a V level here. 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 So you can see what I'm trying to explain. These are areas where we anticipate price will come, tap and buy. So currently I'm not teaching you that. You may be asking, why did it come here? We are not currently looking at trading. We are looking at learning. We're spotting these levels. Okay? You see this? It is an A level. Mark as many as possible. So if I put on a line chart, you can see a V, 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 V levels, V levels. You see that? So that's your homework that I need you to go and do. We are still continuing. I haven't closed. So you write down homework marking V levels. So your homework is, I want you to send me pics of different charts. You go on gold. Basically, gold. You go on any pair. You mark the V and A levels. You send them. Since I am giving you on the 7 days of the week, I'm giving you 6 days, right? So in those 6 days, make your mind busy. Send in my inbox those 50 V levels, those 50 A levels. It is a must. You have to do so. Unless if you want me to kick you out of the 1%, of the 1% league. If you want me to kick you out of the 1% league, don't do my homework. So, 1, my homework stands 50 A levels, 50 V levels. I'm helping you out. For you to understand, for these things to be in your bloodstream, so that you can spot them out. We have looked also at Apex. We have understood how Apex looks like. So let's go number 2. Let's go on number 2. Let's go on number 2. Let's look at number 2. Number 2. Gap SNR. Number 2.
Excuse me, Chris.
Yes, please.
Is it possible to change the color of the background screen? It's quite dark. Some of the candles are also so dark. Is it possible to make it lighter?
Currently, if I start making it lighter, it will take time. So it will take time. Remember, it will take time. But if you haven't understood, I'm recording. You will go. It is well recorded. I'm using OBS Studio, so it is well recorded. You will go and see. But in the next session, I will use a chart that is like that you can see very well. Thank you. Okay. All right. Anybody facing the same challenge? Oh, you're all okay. Yes? Is everything okay? Guys, speak out.
Yeah, everything is okay.
Okay. So let's proceed. Okay, let's proceed. We are now looking at gap SNR. We are looking at gap SNR. So, 1, we have the resistance. I told you I'm going to write in in an abbreviation. So resistance gap, resistance gap, and support gap, support gap, gap. So these ones, they are they just remain the way they are, but I'm just giving the meaning. So the meaning will fall onto what on the candlestick. I'm going to show you the candlestick. Though let me put also the meaning here. The resistance gap. This one consists of this one. Guys, things are simple. I understand you'll be like, oh, you're giving us hard things. No, things are really simple. You just have to be with the book, you note down. Then after you going to start marking those things on the charts, they will be simple. You mark, you giving me those homework, that's when the simplicity will come in. These things are really simple. They don't need too much logic. You don't need too much logic. So this one consists of this one consists of two bearish candles, and we mark the closure, the spelling of closure, the closure of the previous one. I'm going to show you that on when I'm drawing it. So this one, it is a vice versa of the other one. It is the opposite of the other one. Remember what you see in the thing is, these levels I'm showing you, the one you mark the one you mark in resistance, it is the same way you mark in, it is the same you mark in what, in support. Just the difference is they are inverted. This one is bullish, the other one is bearish. Am I communicating?
Yes.
So this one consists of two bullish candles, candles, two bullish candles. This one consists of two bullish candles. So let me draw them. Yes.
The screen has gone off.
The screen has
It's
gone.
back.
Okay. Okay, it is back, right? You're not now all seeing the screen. Yes. Okay, let me draw. Let me draw the resistance gap. Resistance gap. Resistance gap. And at this side we shall have a support gap. Support gap. So this is how they look like. So resistance gap. remember the resistance gap I said. This one consists of two bearish candles, and we mark the closure of the previous one. Yeah, so this is bearish candle. This is how they look like. This is how bearish candles look like. This is how they look like. This is how they look like. Okay. Then the bullish candle. This is how the support gap, I say, it consists of two bullish candles. So this is how bullish candles look like. Let me put this in white. White. So when you see white, it is bullish. And you see, so currently at your level, you can differentiate between bullish and they are bearish, right? So I don't need to explain a lot as if you're a newbie. Currently, you can you know that. Okay. So this is how the candles look like. Remember, we mark after the closing. So, after these candles closing, you get. So remember, these candles have closed. After the closure of these, when you're dealing with gaps, both these candles have to close. So the next candle is where we start. Let me explain this. Let me first draw this. So this is where, this is the closing price, which we mark. So this is the support level. Support level. So that is the support level. Support gap. So we anticipate that in this zone here, there is support. There is support. There is support. What do we anticipate? We anticipate that if the next candle, if this candle opens, it will come and tap there and continue the bullish move. So literally after it tapping there, this is how it will be. This is how it will look like. It will tap there, then continue buying. So we had a support level that pushed this candle to the upside. That's what I mean. That's what I mean. And in the same thing of the V and A levels, we anticipate a candle after this closing, the next candle will come, tap into that zone, then continue buying. The same way of the A level. We anticipate price will come, tap there, then we continue the bullish move. So here it is the same scenario, as simple as like that. So we anticipate that this here, let me remove this because this is not really necessary currently. So we anticipate that in this area there is support, which we anticipate that there is support in this area which will support price to push it higher. And also on the resistance gap, we mark the closing price. Remember, this is the closing price. So this is the support level. This is the support level. What do we anticipate? We anticipate that in this area, there is support. I mean, sorry, this is not support. But guys, can't you rectify me? No kubo munduru no gamba menda chokoze nenda.
resistance, cost.
Yeah, it is resistance. Resistance. Thanks, man. You are here. I can see that you're picking up. So this is a resistance level. So what do we anticipate? We anticipate that at the close of this candle, remember this one closed. After this candle closing, this is when this zone was established after this candle closing. But if it hasn't closed, of course it may trade to the bottom, then it comes back up and passes through this area, hence forming another level. You get? So we read the price after the close of candlesticks. That's how we read. So here we anticipate the next candle will open, come there, then we continue being bearish. So that is how it will be, like this. But literally, of course, we are not looking at trading. We are looking at how these levels work. Okay? We are looking at these levels work. But this is the foundation. This is the foundation of the concept. You knowing and understanding this gap and support this support and resistance levels. So let me go on the chart and we see. Let me go on the chart. Let me go on the weekly chart. When of course these gaps are everywhere, but every time frame has its noise. Every time frame has its noise. So for when you're marking the gap SNR, when you're marking the gap, you don't need to put on the line chart. Line chart basically goes to V and A levels, typically. So here we can see this. This is a gap level. This is a bearish or resistance gap level. We can see this after the closure of this candle. This zone was established. We are not currently looking at trading. We are looking at those types. You can see this. Okay, this zone also it is there. This zone was also established. That zone was also established. So we anticipate price will come, tap, then sell. But we are not looking at trading currently. You get? So you can see these tiny ones. Those are resistance levels. Those are resistance levels. Those are resistance levels. So we have looked at the resistance gap levels. Those are the resistance gap levels. Let's look at something else. So let's look at the bullish gap levels.
Excuse me.
Yes,
Okay.
please. Yes.
Gap, I've not understood it well.
A gap level consists of two candles, or a resistance gap level consists of two bearish candles. And when this candle closes and this candle closes, this closing price of the previous candle here at the closing price where this candle opened, here we say that this is a gap. It is just a name. It is just a name showing the opening price and the opening price and the closing price of two candles, of two consecutive bearish candles. Resistance gap. It is a level. This level consists of two consecutive bearish candles, indicating the open and the closure of those candles. So if you have two bearish candles, right? Two bearish candles.
Yeah.
Have you understood that?
Yes.
If you have
Yes.
two bearish candles, of course this is the open, this is the close of the previous bearish candle, and this is the open. So we mark the previous closure of the candle. The closure. Remember here we deal with the closing prices. So we mark the closing price, aligning it to the opening price. Though remember I said, even if you find a candle has opened from up there and this one closed here and this one opened up here, still we mark the closing price. We don't mind about this slippage. Am I communicating? Hopefully you have understood. Yeah, that is it. So let's go on the bullish one, on the bullish gap. So you can see this is a, what is a bullish gap or a support gap or a support gap?
Consists of two bullish candles.
Yeah, it consists of two bullish candles. And how do we mark it? We mark we mark the closing price aligning with the opening price. So this is it. Two consecutive, 1, 2. These are bullish candles. Where have we marked? We have marked from the closure, aligning it with the open of the another bullish candle. So hence this zone, it is a gap, a support gap. What do we anticipate? We anticipate that the price will come, tap there, and we buy. So though literally currently we are looking at those types of the types of MSnR. So so we have to put in this in our minds, and these are the foundation of trading, this concept that you see me all the time having sniper entries. So we shall not call these ones that support gaps or resistance gaps. Instead we shall be calling them bullish gap and bearish gap. Am I communicating?
Yeah.
Yeah. So also we have also looked at that. So I will need also, now the homework increases. Those are 200 homeworks that you are going to do. Guys, now you feel like, oh damn. No, every day you do 50, man. These things are simple. Don't I'm not here to play with you. Do the homework. Those are now 200 things you are going to send to me. And I mark them everything. I mark, don't think that you will do a mistake and I don't see point it out. I save Richard because these are things that I just open your homework, then I see. So we have looked at we have so far looked at the apexes, the A level, the V level. We have looked at the gap, the support and the resistance gap. So this one we shall be calling it a bullish gap. This one. So its name we shall change it. We call it a bullish gap because you have understood how it looks like. Bullish gap. Bullish gap. And this one, bearish gap. The reason why I put resistance and stuff for you to understand. So bearish gap. Hopefully that is already understood. So what are we heading to? Another one. We are heading to SBR and RBS. And heading to SBR and RBS. So you just give me a minute, then I draw these things. You just give me a minute, then I draw these things. I draw them. Mm-hmm. Okay. So you're on? You're on?
Yeah.
Okay. So yeah, I'm still drawing. Just be patient. I draw this. They are just things. They are just simple stuff. Yeah, just something simple. Let's be on. Okay. Just simple stuff. Okay. 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 So hopefully these things that I have drawn, we have discussed them and you know them. Mm. So we are looking at SBR and RBS. Mm-hmm. So we looked at the V. This is of course this is an A level. This
A level.
this is an A level. We anticipate resistance there. This is a V level. This is a V level. We are anticipating support from there. This is okay. Let me rectify these candles. These ones here. Okay, and look at this is a bearish gap, and of course this one, a bullish what? A bullish gap. This one here. Mhm. So after you knowing these things, so we are looking at SBR and RBS. What do I mean by SBR and RBS? So SBR means where we had support, where we had support. If that zone has been broken, it becomes resistance. That's where the name SBR was established. Am I clear there? Just something simple. Where you anticipate resistance, when that zone is broken, it becomes support.
Support.
Yes. So this is, we anticipated here support. So when this candle came and broke here and closed below there, closed below, this area became SBR. SBR. Simple, like that. We anticipated. Here we had a support here, but when price opened and traded below and closed with a candle body below, if the candle doesn't close with the candle body, that zone it is not SBR. That zone remains as it is, and I'll tell you the name, how we call that name later, after the candle rejects or they just taps it with the candle wick and doesn't close there. I will tell you later, since we are still continuing. So if this candle opens here, instead of tapping and buying, but it closes below with the candle body, this zone no longer becomes support, it becomes resistance. SBR. It becomes resistance. And also here, of course, we anticipated resistance here. So this candle opened and came, broke through that zone. This area is no longer called, resistance, it becomes
Support.
support. RBS. The same as here. Here. Resistance becomes support, as you can see that. So let me take a screenshot. I send it. Let me take a screenshot then. But really, do I need a screenshot? No, it is okay. Let it be there. So you have understood what RBS and SBR mean now. You get?
Yeah.
Yeah. Okay. It's just things are simple. Don't think that there is much context in these things. No, the things are really simple, guys. So let me go on. Is it daily? Let me go on a daily. I show you. I show you from 1 to 8. So let me put on this. So you can see this. This was a V level. It was broken. Of course, we anticipated support from there. Just I'm giving an example. You can see when price broke below this, it became resistance. So what were we anticipating? Price will come back, tap, then we sell. Will come, tap, then we sell. You can see this. I'm just giving an example. So for instance, don't look at this candle that went up. All what we want to see is the candle that has broken and the name was established. Oh, I don't mind about this. Let me cut off here. Don't mind about this candle. All what mind the breakout. This one which has broken out and made it another level. This breakout like this. Don't mind about the other. All I want to mind up, you mark your zone and the candle broke through it. It gave out that name. Oh, that's all I want to hear. You can see this. This breakout made this area be called SBR. So let me go on something else also. That is already cleared. You have understood that, I know. Let me go on something else. Let's look at gaps. You see this? It's a bullish gap. Broken. All I want you to mind about is the breakout. I don't want to this candle for you to will get confused. All I want you to mind about this kind of break that has broken into that level. That's all I want you to mind about currently. You see, let me go on the bullish gap. I see which gap was broken. Which gap was broken here? The bullish, the gap which was broken. Of course, as you can see this gap. Anyway, this gap here. Of course, this one was also broken. This one was broken here, but this one looks more visible. You can see this. It was broken. It was broken. We anticipated tap, sell, but when price came, it just went up. Don't mind that the candle should be nearby. No, it's not that. As long as I want to see a candle break out. A candle break out. As long as don't mind about that the wick has rejected here what, but as long as it breaks, it becomes something that I'm talking about. This, you can see this zone here. Let me even zoom in a little bit for you to see well. You can see this gap here, bearish gap. Price broke and it became something. So we anticipate price come tap, then we buy. The good example, as you can see, tapped, then it bought. After breaking, it came tapped, then price bought. Though it is not what we are looking at, what we want to mind about is the break. Let me go. You can see this break of a bearish gap. It's what we are mining at. This, you can see that. What else? You can see this break. It was resistance, broke, it became support to buy price. You can see that. So that is it. So let's go on final stuff. Something last. What's the time? Okay, it's okay. So let me go on the last stuff, which is a QM. A QM, I don't really use it, but it is there. You have to understand it. Let me go on the QM. Let me first draw something here. How it looks like. We have a bullish QM and a bearish QM. So this is a bullish QM. This is how it looks. I'm going to explain to you. This is how it looks. QM. I don't use it, so don't put much emphasis on it. Don't put so much emphasis on it. It is there, but I don't want you to put so much emphasis on it. Even if you learn the other ones, you give me the examples of the other one and you leave this, it is okay. Because this one, for the meantime, I have been trading, I don't use it. So I can't give you things that I don't use, but I give you for you to know that it is there. So, a bullish QM, it is kind of a reversal. It shows kind of a reversal. So, for instance, when the market is selling, hence forming higher low, lower low, lower high, lower low, lower high, lower low, lower high, then lower low. Then instead of creating a lower high to create another lower low, what it does, price breaks this lower high, hence forming a QM. So this is the QM. It is the same thing with a bearish QM. So a bullish QM, it signifies a reversal to buy. But of course, a bullish QM, it goes with a bearish trend. Then when it is formed a bullish QM, you expect a trend reversal, like it is going to start buying. Hope I'm communicating. Yes?
Yes.
Okay. Then a bearish QM. This is how it looks like. Let me draw. The market forms a series of higher highs, higher low, higher highs, higher lows. Then instead of forming a higher low to form another higher high, it breaks this higher low. It breaks higher low. Hence forming a QM. So what do we anticipate? We anticipate that price will come tap there and we continue our sales. And also the same thing here. After breaking here, we anticipate price will come tap into the QM and we continue the bullish move, because these are trend reversal patterns, this one, but I don't really use it. So this one, it is a bullish QM. A QM in a full term, it is a Quasimodo. This is a bullish QM. Bullish QM. Then this is bearish QM. So as simple as like that. So for today's session, I think I'm done. I'm not going to add on today's stuff. So as I told you, you go on your charts. You go on your charts, your homework till the next Thursday, the same time, the same place. Go mark the A levels, the V levels, as we have learned. You send them to my inbox. Stay away from trading for a while. Give it 2 months, because the third month you are going to trade. I'm sure the third month you are going to place in a trade if you are following my work. You are going to learn how to be patient. You are going to wait for your. You are going to learn how to wait for your setups. You are going to learn how to oppose your mentor. Because me personally, I teach you to be a mentor, not again to search for signals. That's why I don't. I actually, because they were there in my VIP, but one, there is no student of mine is supposed to be in my VIP. However much you're paying $1 million to me, I don't accept you in. That's my rule. No student of mine is supposed to be in my VIP group, but they are supposed to be in my discussion. You are the people I have to recommend people to come to for mentorship. Yeah, if they ask that you are too expensive, where can I go? You go to Emma, you go to Songo, you go to Lil Cube, you go to that, because you guys, I know you. And after the session, of course, I'll have to print out the the certificates. You get, I have to get for you the certificates. And for Sonko, you can bring in your certificate because you finished up. You are just doing a rewind, and we are talking out these things because I want you to be profitable. I want you to see the market the way I see it. I teach you to be a mentor, not again to come to me and start begging for signals. Or you be there, you ask. I want you people to make the ATM out of you, so that by the time by the time you approach me, you are like, mentor, let's discuss about this and this. I'm seeing this and this. I'm seeing this and this. Not like, mentor gave me a signal. Mentor do this. Signals are provided to people who have never entered into my mentorship and those who are subscribing to my VIP. That's all. So guys, go practice these things. Let them be in your bloodstream. This is where you are going to learn starting taking sniper trades, and then people be like, but you guy, who is your mentor? How have you been learning these things? Imagine you have a $5 account, you're entering gold peacefully. Imagine me personally, yesterday I had placed, if I tell you, I had placed 0.4, 0.04. I had $10, by the way. Yeah, I had $10 because I had traded something. Then I got some rise up from the $5. I made $10. So I had entered 0.04 and I was risking $2. Risking $2, I'm making. I was going to make, because where my TP was, if I had entered with 0.02, I was going to make $177. And $177 times 3, how much is that? That's almost 300 and something from $10 account. That's insane. Can you see that is insane, right?
Yes.
Yeah. So go practice these things. As I said, follow. Follow my work. As I'm telling you, you are going to make it. I'm promising you. This is November, right? December, January. By the end of January, if you don't place a trade, then call me a scammer. If you don't place a trade comfortably, you be like, I'm entering this trade comfortably. Call me a scammer. Call me a scammer. Okay? So, the session has ended. Yeah, the session has ended. Please go and practice these things as I have told you. Give me your homework before the next session. Give me your homework before the next session. Have a good day. Go and do your other stuff. Another thing is stay away from your MetaTrader. Just focus on learning for this remaining time I have given you till January. Then you start trading. Okay? And
Alright.
and with me, I don't deal with demo accounts. For after my mentorship, you are going for live trading. Live trading. Okay. Have a good day, guys. See you in my
Mentor,
inbox. Yes, please.
I was asking, is there any way we can?
Yeah, it is recorded. I'm going to send it in the group. Okay.
Alright.
All right. Have a good day.
Chris,
Yes, yes,
hold on.
yes, 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 please.
Do we mark all those things on the same chart or we use different charts?
Me, all I want to say is that even if you mark on the, even if you mark on the same chart, even if you mark on the same,
Okay, fine.
you just zoom and mark. You just zoom and mark, because for me I will be following. I will be seeing. All I want you to do is when you're sending the charts, you first let me say you first text that I'm sending the gap SNR, then you send. Then later you say I'm sending this for me to be to be in position to see what you are literally sending. Okay.
Alright.
All right. Have a good day, guys.